Welcome back to the channel. My name is Mac Rogers and I'm a real estate broker here in the East Bay of the San Francisco Bay Area. My last video, I gave you the California real estate March update. Today, we're gonna look at the March real estate numbers for the whole United States. For the second consecutive month, existing home sales went down according to the National Association of Realtors. While sales are going down, home prices on the other hand are making record level gains. Home prices are reaching new highs. All four major US regions experienced month-over-month drop in sales, but all four regions also had year-over-year gains in home sales. We saw a drop of 3.7 from February in total number of homes sold, which includes single-family homes, townhomes, condos, and co-ops. In March 2020, sales were 5.35 million, while March of 2021, it was 6.01 million. This increase from March 2020 versus March 2021 can be directly attributed to the coronavirus. It seems like ages ago already. I'm sure you recall that lockdown started around this time last year, and the result was a shutdown of all economic activity. According to Lawrence Yun, the chief economist for the National Association of Realtors, consumers are facing much higher home prices, rising mortgage rates, and falling affordability. However, buyers are still actively in the market. The sales for March would have been measurably higher had there been more inventory. He added that days on the market are swift, multiple offers are prevalent, and buyer confidence is rising. You know, in the markets that I serve here in the East Bay, I see this firsthand. Just the difference from the beginning of the year to the end of the first quarter, the prices of the homes are escalating rapidly. Sometimes it's a bit of a challenge to advise my buyers on what price to offer when you look at the comps versus how many buyers are interested in a particular property. There was this one property my clients were interested in, and it was priced higher than most of the other properties in the neighborhood. It was priced right around $999,000. Now, considering what was going on in the neighborhood and the condition of the property, it needed updating. Pricing it at $999,000 was aggressive. When it came time to make an offer, the listing agent told me that it looked like from the activity that she was getting, she was only going to get around 3 offers or maybe, just maybe around 5, which honestly made sense to me and her given where this was priced and what was going on, not only in the neighborhood, but in the city in general. Well, by the time her deadline came, she got a total of 16 offers. The property ended up selling at 1.25 million. No contingencies whatsoever. No loan, no appraisal, no inspection contingencies. Now, mind you, this was not a cash deal. The buyer still needed to finance the property. Oh, and if you were wondering, our offer was 1.14 million. The only contingency that we have was a loan contingency. That's how insane this market is. Now let's continue with our market update. Again, Lawrence Yun also said that although mortgage rates have risen a tick, they are still at a favorable level and the economic outlook is promising. Now, interest rates have been moving. In February, the interest rate, according to Freddie Mac, was at 2.81%. In March of 2021, this went up to 3.08%. While interest rates went up from month to month, it is still lower when you compare it to March of 2020. Back then, the rate was around 3.11%. But here's the thing, at the time of this video, for the first time in nearly 2 months, mortgage rates dropped back below 3% last week, down 7 basis points to 2.97% according to Freddie Mac. Buyers were starting to get concerned because rates started climbing for 2 consecutive months. With rising interest rates and rising home prices, affordability can and will start to get hit. This could have been the catalyst to slow down this market. As a matter of fact, during the last 2 months, mortgage applications went down, most likely a direct result of rising interest rates. According to the Mortgage Bankers Association, after 6 consecutive weeks of dips, mortgage applications rose again to 8.6%. According to Joel Kahn of the MBA, borrowers acted on the decrease in rates for most loan types, with both conventional and government refinance applications showing gains. The spring housing market also saw a boost from lower rates, with purchase applications driven by a jump in conventional applications increasing over 5%. Also, according from Black Knight, a near 10 basis point drop in mortgage rates can reinstate millions of borrowers into high-quality refinance candidate status. After rates fell to 3.04% the week prior, Black Knight found that the number of high-quality refi candidates moved back up to 13 million, potentially putting back 3.6 billion into homeowners' pockets. Even with this little dip in interest rates that we just experienced, consumers need to act fast as rates are still projected to increase or continue to increase for the rest of the year and until 2022. Let's go back to home prices. The median home price back in March 2020 was $280,700. For March 2021, that price jumped by 17% or $329,100. This is for all types of housing. Again, every region was up, and last month price jump marks 109 straight months of year-over-year gains. You know, inventory has been the biggest challenge of this market. Total housing inventory at the end of March amounted to 1.7 million units. This is up 3.9% from February's inventory numbers, but down big 28.7% from 1 year ago. Unsold inventory sits at 2.1 months supply at the current sales pace, marginally up from February 2-month supply and down from 3.3 months supply recorded from March of 2020. Like I said, inventory is the biggest challenge of this market, and it continues to drop every month. Without an increase in inventory, we will continue to see the widening of this equity gap between homeowners being able to build wealth versus renters that want to become homeowners who will struggle to be able to enter the housing market. The number of days before a property gets sold is the only number that's going down. In March, properties typically remained on the market for 18 days compared to 20 days in February and from 29 days in March of 2020. 83% of the homes sold in March 2021 were on the market for less than a month. First-time home buyers were out there. They were responsible for 32% of sales in March, up from 31% in February and down from 34% in March of 2020. What about investors? Well, investors were also out there. Individual investors or second home buyers who account for many of the cash sales purchased 15% of the homes in March. This is down from 17% in the previous month, but still up from 13% in March of 2020. All cash sales accounted for 23% of the transactions in March, up from both 22% in Feb and from 19% in March of 2020. In my California real estate market update, I touched upon this resort communities like Lake Tahoe, Mammoth, and other vacation areas in California. All of these areas are enjoying, or should I say, also experiencing what pretty much the rest of California is experiencing. That is low inventory, high demand, and prices also escalating. Check that video here. Now, for those who are looking for bargains or distressed sales like foreclosures, short sales, that represented less than 1% of sales in March, equal to Feb's percentage, but down from 3% from March 2020. I made a video about why we won't see a foreclosure wave this year and probably not ever in the foreseeable future. Check out that video here. Now let's take a look at single family and condo and co-op sales numbers. Single-family home sales decreased to a seasonally adjusted annual rate of 5.3 million in March, down 4.3% from 5.4 million in February, and up 10.4% from 1 year ago. The median existing family home price was $334,500 in March, up 18.4% from March of 2020. Existing condominium and co-op sales were recorded at a seasonally adjusted annual rate of 710,000 units in March, up 1.5% from Feb and up 29.1% from 1 year ago. The median existing condo price was $289,000 in March, an increase of 9.6% from a year ago. Let's look at the regional breakdown. In comparison to a year ago, median home prices rose in each of the 4 major regions. In the Northeast, March 2021 existing home sales dropped by 1.3%, recording an annual rate of 760,000. But again, this is still up by 16% from a year ago. The median price in the Northeast was $364,800, up 21.4% from March of 2020. In the Midwest, existing home sales declined by 2.3% to an annual rate of 1.2 million. And it's marginally up by 0.8% from a year ago. The median price in the Midwest was $248,200, a 13.5% increase from March of 2020. In the South, existing home sales dropped by 2.9%, recording an annual rate of 2.7 million in March. Again, also up 15.9% from the same time 1 year ago. The median price in the South was $283,900, a 15.6% climb from a year ago. And finally, here in the Wild Wild West, existing home sales in the West fell by 8% from a month prior, posting an annual rate of 1.27 million in March. Still, compared to a year ago, this number is up by 15.5%. The median price in the West was $493,300. This is up 16.8% from March of 2020. So that's our latest housing market report for the month ending March 2021. What's in store for us? Well, we need more inventory. Builders need to build more housing that are geared for both first-time homebuyers and homeowners that want to upgrade. While the latest home building numbers are encouraging, housing starts increased in March by 19.4%. Unfortunately, this is still not enough. Also here in the West, California in particular, where I'm in, we are not seeing this surge. It's only happening in the other regions of the US. Hey, I hope you enjoyed this update. If you have any questions, comments, or feedback, please let me know below. I'll see you on my next video.